All right, guys. Hopefully you had a good weekend. It's the Option Infinity strategy session for September 13th. Last week was pretty crazy. Um, Obviously, disclaimer, as usual, do your own research. This is only for educational purposes only, yada, yada, yada. So last week was pretty crazy, right? S&P fell 2.5% roughly. NASDAQ was down 4%. Russell was down 2.5%. And the Dow was down around 1.6%. So pretty bloody week overall. And that's expected to continue into the election, which is only about a month and a half away now. For this week, we have no data tomorrow economically. Tuesday, we have Empire State Index, Import Price Index, Industrial Production Index at 9:15, capacity utilization rate at 9:15 as well. And then at 10 a.m., we have three important numbers. These are reported annually. We have the real median household income, which last year was about $63,000. We have the poverty rate and the uninsured rate. So the chart at the very bottom right here, you can see, depicts the real median household income. And as you can see by those gray bars plotted on the chart, those depict every recession we've had over the past roughly 30 years or so. And you can see that we usually have a small dip on median household income during those recessionary periods, right? I expect a similar thing to occur right now because obviously we're in a pretty bad recession due to the coronavirus. Keep an eye on that. That'll be on Tuesday at 10 a.m. Wednesday, we have retail sales and retail sales ex autos. So those will be big numbers to look at. If you're trading any retail stocks like Kohl's or Five Below, Walmart, Target, etc., you're going to want to be cognizant of those numbers on Wednesday morning at 8:30 a.m. 10 a.m., we have the NAHB Home Builders Index and business inventories. 2 p.m., we have the Federal Reserve meeting announcement, as well as a discussion or press conference by the Fed Chairman Jerome Powell himself at 2:30 p.m. So Wednesday should be a pretty volatile day as well, guys. So keep that in mind. Thursday, 8:30 a.m., we have jobless claims and housing starts, building permits, fully fed manufacturing index. And we also have current account deficit and the University of Michigan Consumer Sentiment Index on Friday, right? So that Friday number at 10 a.m. should be interesting as well for the market. But Tuesday, Wednesday, and Friday are the more important numbers. Again, Thursday's jobless numbers hasn't really caused any movement in the markets whatsoever. And remember that Friday is the monthly OPEX for September as well, right? So this week on Tuesday, other events, we have the Apple Keynote, and they're expected to announce something called the Apple One announcement, or the Apple One program, which is supposed to be a bundling of their services. They want to combine essentially their Apple Music, Apple TV Plus, Apple Arcade, iCloud, Apple News Plus, as well as possibly a new fitness subscription service. So keep an eye on that possibility of them discussing a new fitness service, because that could possibly hit Peloton, right? There have been rumors in the past that Apple might create their own fitness devices. I'm not sure if they'll go that route, but if they do create some kind of subscription-based app for the iPhone, iPad, and Apple TV to do workouts at home, that might have an effect on Peloton, right? I have seen numerous other stocks affected by Apple keynotes in the past, so I am going to be looking at that. And actually, that will be our trade of the week that we're looking at toward the very end here. Also on watch will be the Apple Watch Series 6. The updates to the Apple Watch are all rumored to be internal, nothing externally at all whatsoever, right? So the changes that are supposed to be occurring would be improved battery life through efficiency gains instead of a better battery. Water resistance will be better Wi-Fi and cell speeds. And it's also rumored that they might have a blood oxygen monitor installed on it as well, which would be pretty interesting, right? Also, a lower priced Apple Watch is also being speculated too. The new iPad Air is rumored to feature Touch ID for the first time. To me, big deal. I don't really care about that. Other features that are being speculated on include a USB-C port instead of a Lightning port, which would allow for charging with USB-C cables, as well as a Magic Keyboard to pair with it. iPhone is not expected to be discussed at all this week because they've already said they won't be releasing new iPhones until October due to production delays. So they'll probably do a keynote in October before they unveil the new iPhones, which should have 5G capabilities and should be very hot sellers. You know, I know a lot of people that want to get a new iPhone. I myself hadn't been interested in buying a new phone for a while, but if they do have 5G and we do have the infrastructure in place, obviously having faster data speeds on your phone is important, right? Otherwise, there's also speculation of AirTags, which are kind of like a little Bluetooth product that you can stick to your devices, like, you know, backpacks and whatnot, or you know, car keys, whatever, and track your items via your phone via Bluetooth, right? Again, it already exists, but it'd be kind of cool to have some Apple AirTags and toss them in different things that you often lose, right? And then also, lastly, the AirPod Studio. Those would be interesting to look at if they do release those too, which should be a studio quality version over the ear variation of the AirPods, right? Again, nothing really game changing, but you know, again, Apple does have an effect on other companies. Also, if they make mention of any of their internals whatsoever, it can affect some of their suppliers. So keep an eye on their suppliers as well, right? Looking at their chart, they have a nice big fat gap right around 96 to be filled. Also one at 106 as well, which is not very far away. And they are touching the 50-day EMA. So keep an eye on that. If they do break below 110, I expect them to at least gap fill that first gap at 106 area. And it's possible they decline all the way down to 96-ish, fill that second gap, which would make sense to me. But keep an eye on that area around 110. As I speak right now, futures are nice and bright green, but who knows what will happen in the morning. Also this week, there are a number of IPOs occurring. I'm actually working on a second video for just IPOs, which I'll be posting on my YouTube channel probably tomorrow. So keep an eye out for that. But there are 4 IPOs that I am looking at. There's Amwell, which is a competitor to Teladoc Health. They're backed by Google, and they plan to sell 35 million shares in a range of $14 to $16 at a valuation of about $5.25 billion. They're a leading telehealth company that's obviously rivaling Teladoc, which I just mentioned, and Teladoc has been crushing it this year. They're up 130% this year alone. As part of the $100 million investment from Google, Amwell will switch its services to Google Cloud from rival Amazon Web Services, AWS, right? Amwell reported a almost 800% increase in revenue in the first half of 2020 to 122 million, right? So that's quite a decent valuation for a corporation that's only making about annualized rate of around 240 million. At a valuation of 5.25 billion, it's pretty rich for my blood. But again, I do like where they're going with this. It is a value-added service and it's backed by Google, right? So keep an eye on that. JFrog plans on listing and selling 11.6 million shares in a range of 33 to 37 at a valuation of approximately 4 billion, right? The company calls itself a liquid software company and provides end-to-end continuous software release management. JFrog's customer base of 5,800 customers includes 75% of the Fortune 100 companies. And then JFrog reported revenue of 104.7 million last year. And that was a 65% increase year over year, right? Again, seeing these valuations and seeing these IPOs kind of reminds me a little bit of 08 and also the tech bubble a little bit, right? These are value-add services, but they are also very richly valued too, right? Keep in mind why IPOs exist, right? And think about why investors want to cash out. Obviously, they want to cash out for more liquidity, but they also may want to cash out because they may believe that the valuation is at its peak, right? It's a possibility too. Next one is Snowflake. I think they're IPOing on Thursday, if I'm not mistaken. And they are both a competitor to Amazon and Microsoft, and also they also use those platforms to provide their service, right? Snowflake helps mobilize the world's data through data warehousing software as a service. They're seeking to sell 28 million shares at a range of between $75 and $85 per share The valuation there would be over $20 billion, which is, again, very, very rich. We're seeing a lot of these SaaS companies valued at, 20 to 30 times their sales numbers, which is absurd given that historically they should be trading at about 10x sales, right? Second quarter revenue was up 121% to 133 million. And they now have, I believe it's now 4,800 customers overall. And they also have investments from Berkshire Hathaway, Warren Buffett, obviously, and Salesforce Ventures as well. They've each agreed to put in $250 million into the data company at, I believe, $80 per share on the IPO. But again, remember that $250 million is not a lot of money to these companies, right? Berkshire has, I believe, 170 billion in cash. For them to throw in, a quarter of $1 billion is a drop in the bucket. So take that with a grain of salt, right? And remember that, you're investing in a corporation that, is trading at roughly, I guess, based on their last estimates, I think it's around 35 times sales, right? So that's pretty rich. I'll be talking about them more in my video tomorrow. Keep an eye out for that as well. And lastly, we have Unity as well, which is a software company that rivals Epic Games, which makes that game, what's it called again? That open world game, I forgot the name of it, but Fortnite, that's what it is, right? And their platform is used by more than 50% of mobile, PC, and console gamers, and also used by movie studios as well. They're planning on selling 25 million shares at a range of $34 to $42, which would value them at the midpoint of $9.5 billion. They saw revenue last year of 541.8 million. And this year in the first half, they're already at 351 million, right? So they're on pace for about 700 million this year, which is good, obviously. But I want to see what, their books overall and see how profitable they are, right? Currently, their rival Epic Games is valued at 17.2 billion and had revenue of 4.2 billion in 2019, right? So you can see that Epic trades at roughly a valuation of like 4 to 1 price of sales, right? And Unity will be trading at a valuation of around like roughly 15 to 1 or so, right? So the valuation is kind of rich, right? Anyways, that kind of reminds me of peaks in the market, because I remember seeing Visa IPO before the crash in 2008. And then obviously there were numerous companies that IPO'd before the tech bubble burst as well, right? So these are all small signs I see of bubbles forming in different places. Again, there may be value add in the service they provide, but it doesn't mean it's a great valuation to be buying in at. And people can get caught in the frenzy of thinking, I'm buying Snowflake at $80 a share, and I'm buying with Warren Buffett, and I'm buying with Salesforce Ventures. But is it really a good buy longer term based on the valuation I'm paying for right now, right? Perhaps you can buy it in a few months at $50. Who knows, right? Keep that in mind and do your own research, obviously, but I'll be discussing that more tomorrow in the video, okay? Lastly, I had a few discussions in the past couple of weeks with different people that are just hell-bent on buying Bitcoin as a hedge, right? They view it as a form of gold. And I keep on having the same argument with them, right? So I figured I'd kind of talk about this right here. Looking at the chart, you can see that Bitcoin back in March performed pretty poorly, right? Overall, the market was down about 35%, the broad market. Bitcoin was down, I believe it was 51% at its lowest point. Comparing that to gold, which is down about 14% in the March correction, right? So you can see that on these declines in the market, Bitcoin sells off a lot more than the market does, which means that it's not actually a hedge, right? It's actually a pretty terrible hedge if you're using it as a hedge, right? So why isn't Bitcoin a good hedge, and why isn't it a good investment in my opinion, right? Again, people may have their own opinions about Bitcoin, but for one, lack of scarcity, right? There are a lot of Bitcoins available out there, right? And they are forking it as well. Secondly is limited utility, right? Meaning that you can't just go and spend it wherever you want to spend it, which brings me to my third point, which is that volatility limits its use as a currency, because you can't transact, right? Because by the time I pay someone with my Bitcoin, perhaps the price changed 5 or 10%, and that's a big problem, right? Because you want to transact with a stable currency, right? As I mentioned already, it has significantly underperformed both the S&P and gold in times of market turmoil, right? And it's also, its value is based purely on speculation and the faith that others believe it will increase in value in the future, right? That's all you're investing in, right? So again, if you're investing in it, you know, make sure you manage your risk well. Don't throw a huge portion of your portfolio into it, like one of my friends did, and put his entire portfolio into it. And you know, I'm kind of, I'm not laughing at him, but I'm kind of like telling him that he's not very smart for doing that, right? You know, just be smart, and if you're going to speculate with whatever you can afford to lose. You know, toss like 1-2% of your portfolio into an asset and say, you know what, I don't mind if I lose that, but realize you're speculating and not investing, right? So there's that as well, right? Earnings reports for the week ahead, not really much going on. There are 2 big reports on Tuesday after close. There's FedEx and Adobe. Those ones should be interesting. Obviously, FedEx has been crushing it of late. Last report, they skyrocketed along with UPS. A possible decent idea would be to play UPS options instead of FedEx, because UPS will have the monthly OPEX, so it'll have high liquidity, whereas FedEx will have the high implied volatility this week, right? You can probably play the same direction. If you believe if it's in a pop after earnings, you can play, you know, UPS calls or call spreads, and vice versa. If you believe it'll drop after earnings, you can play UPS, you know, puts or put spreads, right? Same idea. It's a sympathy play, right? Yeah, that's pretty much it for earnings. Otherwise, the S&P analysis for the week, current price 333.53, although it is up about 1% in the futures market right now. The EM for the week is $9.28, or 2.8%. The PM for the week is $12.2, or 3.7%. The upper move is up to $345.73, and the lower move is $321.33, right? Which would fill, I think it would fill one of the gaps right around 326 area, right? That's a possibility, right? NASDAQ 100 Index ETF, triple Q, current price 269.94, EM $10.08, or 3.7%. The PM is massive this week, right? You have a PM of 5%, or $13.43. So the upper move would be 283.37, and the lower move would be 256.51. For the Russell 2000 ETF, IWM, current price 148.78. The EM is 466, or 3.1%. The PM is 645, or 4.3%. The upper move is 155.23, and the lower move is 142.33. Ticker analysis from last week. Again, thank you very much to Frankie for this. He does a great job on this every week, guys. I appreciate it a lot. And also some very good insights from Frankie as well, right? So looking at the very bottom, you can see on the left-hand side that all the tickers closed inside of their PMs this week, right? 11 out of 33, which is 1/3, breached the PM temporarily, but closed within it. And only 4 out of 33 of the tickers closed green on the week, right? So you can see the breadth of the decline is very, very wide on the downside. A lot of selling going on, a lot of uncertainty approaching the election as well. So trade cautiously and use this information to make, you know, wise decisions. Last week, basically, if you had traded any iron condor, you would have won basically on any of these tickers whatsoever, right? And again, that's kind of an anomaly, but it shows that volatility was fairly priced last week, right? But that doesn't mean that it won't keep on rising, right, into the November election period, right? And again, it's very prudent to wait for the potential moves to occur prior to entering into credit positions, and spreads are recommended on debit positions given the elevated IV, right? So any position you're taking right now, doesn't matter if you're bullish or bearish. Most tickers, the IV is elevated because overall the VIX is elevated right now too, right? So keep an eye on the IV percentile on each ticker, and you can find that if you go to your scanner, look for IVP or IV percentile. You can scan by 26-week, 13-week, or 52-week. I recommend using the 26-week because that'll kind of weed out some of the outlier data. But either way, trade cautiously, and spreads are highly, highly recommended right now. For the week ahead, ticker analysis, we only have two earnings again, as I mentioned previously, Adobe and FedEx. So Adobe has a potential move of 10.3%. That would be about $50 roughly, 48.75 to be exact. Upper move would be 520.45, and the lower move would be 422.95. And then you have FedEx, which has a potential move of 13% or $30.33. The upper move would be 263.12, and the lower move would be 202.46. So again, I mentioned previously that UPS would probably be the better play to play in sympathy with FedEx, right? And given that UPS would have the monthly OPEX, which is for Friday, you're gonna have high liquidity probably for those options, right? Which is important if you're trading earnings, especially. The rest of them, you can see there are a lot of 5% plus PMs expected. Some of them 10%. You can see that there's a PM of 10% on SPCE. There's a 13% PM roughly on Tesla, Wayfair 11.2%. Then you have Zoom meeting at 9.5%. So there should be a lot more volatility this week in those tickers. Keep an eye on those, and obviously trade wisely. And as I said before, wait for the PMs to hit if you are going to be using them, the information here for credit positions, right? So for example, if I'm trading Apple and I see that the upper PM is 120.38 and the lower is 103.64, perhaps it hits the 103.64 mark tomorrow or Tuesday, right, on a decline, or the upper, whatever. Upon hitting that, I can then sell an out of the money either put spread for a credit on the downside, or on the upside, selling out of the money call spread for a credit, right? But obviously, remember that they have the keynote event on Tuesday, right? So that may affect the pricing if they have some random news that no one thought of. That's kind of a surprise to everyone else. That may cause a nice pop to the upside, right? Trade idea for the week is a short Iron Condor on Peloton. Again, this is purely for educational purposes. I'm not actually doing this myself, but it's important to understand, how trades work. So looking at the 50-day EMA, it's at around 70-ish. PTON has had a massive run the last 2 weeks from around 65, 70 area up to 95 area. I expect a pullback down, kind of like Zoom experienced. So it's sitting right at the 90 EMA right now at around 80, 83-ish, 84-ish. So if it breaks that, I would expect it to try and pull toward that 50 EMA at 70-ish, which is why my idea for the week, and again, IV declined a fair bit after earnings. You can see that dip on IV for the September OPEX, which is Friday, and then in the October 16th OPEX, which is the orange line. That's why I'm looking at doing a reverse Iron Condor, because I'm not sure what direction it's going to move in, but I want to benefit off of one of the moves in either direction, right? So what you would do is you would buy both the call spread and put spread, right? $5 wide, and that would entail buying the 80 strike put, selling the 75 strike put against it. So you have a five wide put spread, 80.75, and then buying the 90 strike call and selling the 95 strike call. So you have a 90.95 call spread. Overall, your debit would be 235, right? Your break-even prices would be your long strikes, your 80 put strike less your debit amount, so it would be 77.65 break-even, or your 90 strike on the call side plus your debit amount, which is 92.35. Your max profit is found above 95 or below 75, and given the short-term duration of the trade, the adjustments are very limited, right? Should PTON trade below or above either of the short strikes in advance of Friday's expiration, it is advised to close a trade to lock in profit. So for example, let's say for whatever reason, Peloton fell below 75 tomorrow or Tuesday, I would take whatever the profit is on that position and I would close it out, because the risk would be that it might hold below that on Monday, Tuesday, and then Wednesday recover above 80. And then, I'm into Friday where I'm not in the money on either of my strikes, right? That's the danger there, right? The maximum possible loss, that's from last week's, ignore that. There's no maximum possible loss there. The maximum loss is your debit amount. And the potential catalyst for a sharp move could be Apple's keynote on Tuesday. If they announce a competing product, it could hit Peloton stock pretty hard, right? So that's it for the week. We'll do a Q&A session right now. I'm just going to stop recording, and we can go from there.